One of the things that we're going to cover MMTs now that we're well after the closing bell on 11/29 of 2011. 11/29/2011, very special day. Yesterday we had the huge gap up in the markup and whatnot, and what I have here, MMTs, is the markdown today in the Nasdaq 100 component. That is all of the Nasdaq 100 stocks. Green Mountain Coffee, WYNN was marked up on an upgrade, and these are the culprits, the same ones that have been going down. The Amazon, from its earnings after a big pop, it got marked down. Look at the gap open down. That's what this column is. This was a gap open down in the morning, and you can see the net changes here all the way. Google, well, it was down too, but they were all marked up on 11/28 on a huge gap. What we will do is that you can see where the markdown stocks are and price line, and you can see what sectors that they come from, because you already know that from all the sector indices that you've been trained on in the apprenticeship. Apple is down here, but look, I will go to the net change column, and let's try to do descending, and let's take what some of the winners were in the Nasdaq 100. Beaten down RIMM on speculations, it's going to get bought out. Seagate with an upgrade. Dollar Tree, Apollo, ROST stores, Expedia, Costco. These were some of the winners that were in the Nasdaq 100 right here. You can see clearly, though, that the losers that drive the market are a lot of the larger cap type stocks that we already covered. What I would tell you is that they have to hold the critical support levels and whatnot. As far as the percent gainers and percent losers on an accumulative 5-day rotating level within the broader Nasdaq 100 index must participate at higher beta price action levels, meaning that from the original markup that we had to today's pullback, from the big gap up open, the gap open, it's called a gap up or gap open, that happened on Monday and today's Tuesday. So basically the rotating accumulative 5-day rotation has to be an accumulative pattern. And so these were accumulated today because they're positive in the Nasdaq 100. But the problem that we have, once again, is that these are heavily weighted. Some of these names, Amazon, CTRP, it's got a fairly decent weighting these days. SanDisk, WYNN, Green Mountain Coffee, Netflix. SanDisk is going down for reasons about supply channels. JOYG Global, well, it's another one that's been going through lots of transition phases, good company. However, you want to know that these higher beta ones like the price lines as well, and you want to know that the technology weighted and hardware and software sectors and indices, they all come out of different ones that get made up. The Nasdaq 100 must hold the current lows that were set in today moving forward, or the market will remain at extreme risk levels. That is the negative percent change column in the Nasdaq 100 here. And you need to know how it's weighted. And it's weighted with the higher beta stocks, starting from Apple all the way up through this chain. And they're the ones that drive the prices down, more so than the accumulative side, which is this side. And that's going to be up here. So these kinds of stocks here, do not have nearly the price weighting in the index as the ones that are leading it down. And the ones that are leading it down are these right here. And they're much heavier weighted in price action in the overall Nasdaq 100. That's one way of looking at it outside of looking at your daily chart. Nasdaq 100, this was your markup that you had to the 10-day simple daily moving average. At that point, you can see here that even though that you were selling into a daily moving average at resistance on the Nasdaq 100 chart, but you need to know what was the culprit. And had these higher beta, bigger names been participating, you would have went through that declining daily blue line 10-day simple moving average. You would have went higher had these not have been the main culprits leading the market down. And Green Mountain Coffee, Netflix has been weighing on it. Amazon's been weighing on it since it's missed its earnings. Another one that's been weighing on it of late is this price line. It's almost dropped $100, down big again today on the short. I was calling this short out earlier in the morning to keep looking at it. Another thing that we'd like to talk about is how to apply this big gap to the daily Nasdaq 100. Is they're at even, and I'm going to show you this particular trend line. I'm going to delete that. This bar and this high and that low, we better continue to consolidate, and the very same leaders that were marked down from profit taking from this big gap that happened here in the Nasdaq 100, a lot of these bigger names had gapped up and ran very strong on Monday. And you can see where the losers, like the wins, even though it was marked up with an upgrade, went down. And we're going to be covering this index more and more for the 2012 analysis and how to use this Nasdaq 100 with bears and bulls. Not only that, the reason why you did not go through resistance, and it's better than some person, oh, well, hey, you had resistance at the 10-day moving average. So what? We can see that. What was behind it, though, is the key, my friends. And this is it. And you have to learn how indexes are weighted in the Nasdaq 100. It's the 100 stocks in the Nasdaq composite that go in here, and their volume, price, market cap, among a few other things, weighted to make these indexes up, just like you have an S&P 500 index. And you need to understand the weighting and what moves them and what has the most weight on it so you can develop your long and short positions. So that's why you sold off. The high beta winners did not break through their resistance levels. Therefore, because of individual stocks not breaking through resistance levels, Google did the same thing on a daily chart. Look, you want to see a comparison, I'll give it to you. Google daily chart, 10-day simple moving average. Stock goes up and tests it from its markup, just like the Nasdaq 100. It's a leader. It did not break through it. This is a reference point. Once again, here's the Nasdaq 100 right there. 10-day simple moving average, sold into it. The leadership behind here did not break through their resistance levels. That's why you could not break through the 10-day simple moving average. All of the names that are the biggest weighted part of the Nasdaq 100, that's price action, volatility, market cap. You want to name the whole thing. We'll have a new lesson on that. We'll be happy to go through that in a different session. This is what it is, MMTs, and this is the reason why the Nasdaq 100 closed lower today, is because stocks like Google and other stocks could not break through their resistance levels. And you can, this is like a tracking stock, and Apple will be the same way. and they both have something in common. This one was part of the bigger scheme in the Nasdaq 100, and all of these culprits behind here, Qualcomm, Priceline, Broadcom, all of these, Amazon, all of them, they're all higher beta names, and they sold off at resistance levels and pulled back from yesterday's gap. That's how you read the Nasdaq 100. That's how you know why it sold and who was behind the selling part of the Nasdaq 100.